Yeah, welcome to our third day of our trading webinar. And today I would like to talk about how the big players act and trade. And yeah, I want to give you some examples of my personal history as I traded my funds and I had my team of traders, how the big players think and act. It's very important to understand this so that we can actually get an idea of what they are doing, how they are doing it, and how we can actually participate in it. I mean, the first rule is we cannot play against the big players because, well, against the BlackRock, who has more money than the German and French government together in GDP, is a different story. Also, they have the best engineers, the best coders, the smartest mathematicians in the world. If you go to a university and you're like in the top 10 in each class, they probably go to hire you. So they have the smartest minds, the biggest infrastructure. They have a computer system called Alibaba, sort of AI analysis software, which predicts and analyzes stocks, market trends. So they have a completely different way of trading and different way of thinking and different resources that we do not have and cannot even think about competing with them. So since we know this, that's a fact, and we do not need to make to get this illusion that we probably can compete with them. Forget about it. Only waste time and energy. So you simply have to learn exactly, Aladdin. Yeah. So we simply have to learn to find out how they actually think, how they trade, so that we can participate from that. If you are a huge player, yeah, you have a big problem, and that is liquidity. Like I said, the example of BlackRock, if you have so much money under management, then you simply cannot buy any company. Or look at Warren Buffett. Warren Buffett cannot simply buy any stock. It's not possible from the rules and regulations. These companies must have a certain volume or market capitalization. But the biggest problem is simply liquidity. I had the problem by myself as I was trading in China, especially in Hong Kong and Shanghai. Most of the stocks, they were, well, for normal traders, for normal people, there was sufficient liquidity. But if you wanted to invest like $10 million or more in a company, we cannot simply buy. If the daily trading volume is only like $2 or $3 million, and I want to enter with $10 million, I cannot. Well, I can, but then I get really, really bad execution, and I'm paying too much for that stock or for that underlying. And then, of course, I would have I would have a problem, and I would be a bad trader and lose money. So to actually overcome this, we have to split trades over many, many days, weeks, sometimes even months. Yeah, depends on the stock and depends on the investment amount. And like BlackRock, Warren Buffett, every pension fund has the same problem. They simply cannot click buy market like we are doing this. They have to think carefully how to enter into which price levels. So then if I talk about my own company, how did I manage this? How did I place my orders? First of all, I had a team of traders. We were 30 people. These included, of course, the CEO. I was not the CEO myself. I was the chairman, and I'm actually not responsible for the daily business. It is not my strength. I focused on trading and educating my team of traders. Basically, I had around 7 to 10 traders, mostly who were focusing on trading our own developed trading strategies and also executing our trades. So, for example, one trader got the order, today you have to buy company X and you have to buy 100,000 shares or 50,000 shares below this price level. If you could manage this and buy below this price level, you actually get a bonus and you fulfill your job. Then the second problem that we have, and also what Aladdin is basically, or BlackRock is facing, you cannot simply trade through one account, because each trade or each order has an order ID. And this order ID can be traced back to the person who placed the order. And if the market knows who placed actually the order, then they can bet against you and they can actually destroy your trades. They can even push the stock upwards or downwards so that you even have to pay too much, or that, well, they screw you even if you trade on margin accounts, for example. So you have to split your trades. Actually, at the top, we had like 200 or 250 different accounts on different names that actually executed the trades. For this, you need a team to manage this. So nobody could trace back who actually placed these orders and who was actually the owner of that stocks. Well, these had several reasons. One, of course, the most important was, of course, insider trading in China. We have to say that is common way to make money at that time, or still it's this, and nobody should know that actually we are behind that trading. And secondly, also the official reason is we do not want to know that the government or the China Security Regulatory Commission, the CSRC, the equivalent of the SEC in the United States or the BaFin in Germany, knows who is playing this game, who's behind this. And then if we have the team of traders, if we have these hundreds of bank accounts that can execute, we have to set up a benchmark. Yeah, and our team of traders, they actually did not get paid by making profit, because we already made our trading decisions that we want to enter this stock. And well, the reason behind this, the traders, in 99% of the cases, I did not even know why they actually got this order. Yeah, they were not aware of our intentions. This only knew my business partner, myself, and our other trading partners with who we set up the deals together. They did not know if a stock had good news or not, or whatever. So only we knew this. We just told the traders, each trader separately, even the traders between each other didn't know what they were actually doing. There was no transparency. You know, you always have to be very careful if you deal with information. Because if a trader knows that he can also work against your own company, yeah, and or sell this information to other institutions, they are doing this. It's a very common thing in that industry. You can make a lot of money with information, huge amount of money. Yeah, so they did not actually know what our intentions were. But still, we have to set up a benchmark of how they're getting paid. And this benchmark is essential. And this benchmark basically is common standard in the investment or trading industry until now. It was like 20 years ago, and still it's the same today. So, and the traders got paid according to this benchmark. If they bought below the benchmark price, they actually were good traders because they bought cheaper than the standard price. So this is how they got their bonus. If they bought above the benchmark, then of course they actually were bad traders and they paid too much, so they did not get any bonus. And this is the way how they were thinking. Can I, or when can I buy below benchmark, or can I sell above benchmark? Yeah. So they have a complete different focus on the market than we do. We try to make profits from buying and selling, and this is our return. For them, it was simply buy below or sell above benchmark. So, and what is this benchmark? I mean, if you watched my YouTube videos and my live streams, you know that the benchmark is called volume weighted average price. There's also time-weighted average price, but for me, the focus is on the VWAP, so to say. This is a common benchmark. On the right side, we can see the formula. Who is a mathematician? You can have a deeper look into that. Basically, for me, it's important that this formula is only based on volume and price. There's no time included. And volume and price are the most important factors for me in making trading decisions. So the benchmark includes this. And do not compare or the volume weighted average price as an indicator. It's not an indicator. If somebody's talking about the VWAP as an indicator, he already doesn't know what he's talking about. And I also like to study the formulas, even if I'm not a mathematician, but I want to know what is behind the VWAP. So it's a benchmark. And I know also from my own fund, this benchmark is based in algorithms. Traders that I had at that time when I was trading, we did not have algos who were trading. We did it manually. And this was the benchmark. If somebody bought below the volume-weighted average price, he was good. If he sold above volume-weighted average price, was also good. But if he bought above, then he was not a good trader and he didn't get any commission. This is how we actually paid our traders. And this is still common standard in the industry. How traders in banks, hedge funds, basically are getting paid if they have to execute orders. If, for example, Warren Buffett wants to buy a certain stock and he says, I want to buy NVIDIA at 100 US dollar, well, he cannot place a buy limit order with like 100 million shares at 100 US dollar. Everyone would see this limit order. And well, the price would never go to this order because people would buy before that order and they can see it and they can even trace it back to Warren Buffett or to Berkshire Hathaway. So to avoid this, you have to split it on hundreds of different accounts. And it's very difficult to simply say, I want to buy at 100. A market is dynamic. It's moving every day. And every day the market has a new evaluation from the traders and investors. So you actually make a decision that you want to buy 100 million shares of NVIDIA over a period of like 1 month. And the price should be below the volume weighted average price. Then you get a fair execution. Very important to understand. This is how the market's working. And this is, I'm not inventing this. There is a study actually from MicroStrategy and Coinbase. This is one of the few studies that are actually available. I also have the link here. I will post the link into the chat. So this case study basically is saying, it's from December 2020, how MicroStrategy worked together with Coinbase to execute large orders. And the market VWAP is in progress. You can read through the study to get a little education. And these are research papers that I am trying to find and read every day. This, if you're really smart and intelligent trader, you're looking for this sort of research paper to understand how the smart money is working. And in this paper, you find so many jewels of information, diamonds, that you can use for your own understanding to become profitable and to find your own niche in trading. Forget about looking at charts. This is really the last, and I would say dumbest thing that you can do if you want to become profitable. If you want to become a smart trader, look for these things. And here is explained how Michael Saylor and Coinbase worked together to place order of $250 million, for example, in Bitcoin. They executed over 200,000 child fills with an average fill size of 0.3 BTC. Yeah. They used the time-weighted average price, TWAP. It's equivalent to the volume-weighted average price. And this is a service that institutions are offering you, like Coinbase. They did not buy just like, I don't know, 100 Bitcoins. No. 200,000 child fills with 0.3 Bitcoin. So nobody knew that they are actually entering the market. 0.3 Bitcoins is not much. They were incognito, so to say. And this gives us the idea, okay, if they are working according to TWAP and VWAP and ordering like 200,000 small orders when the market is coming around this, this zone. So something is going to happen. Algorithms are going to buy or sell. The smart order router to choose the best pool, yeah. In the example of the micro-strategy execution, while the human traders input a few hundred orders, the algorithms converted that into close to 200,000 orders. Yeah. This you have to understand. And if you understand this, you know that something is going to happen around VWAP. And this is the niche that I am using in trading. I'm trying to understand how the big money is thinking, how they are placing their orders, so that I can jump on them. This is my niche, to understand algos and using the algos to my advantage. They are like a booster, yeah. If you know, if you're still in my age, I like to watch a Knight Rider with David Hasselhoff, the TV series, and then, you know, he had this black car, then you press the turbo boost button and the car went a lot faster. So, and the VWAP is something like the turbo boost for our trades. And this turbo boost is started by the algorithms. There are different types of VWAPs, yeah, that we can use. There's the anchored VWAP. I can choose, the anchored VWAP basically means that I can choose fixed unique starting point, like a high or low. Yeah. Then we have fixed starting VWAPs, like a day VWAP, a week, month, year VWAP. Depends on whatever time frame we are looking at. Then we have a session VWAP. Session VWAP basically is for me the start of the official trading session, the regular trading hours. Then we have event VWAPs. For example, for me, if there are big news coming out or came out, and this had an impact on the market, then I can place an VWAP at this starting point. And also very good, especially for stocks trading, and I can tell you in the stock market, this VWAP is working very well because the investment horizon is a lot longer than basically the futures market. And if a stock has, for example, gap up, then it's also a nice way how to enter a VWAP and then basically trade above the VWAP. Also for me, it's very important, are the prices trading above VWAP? We are in an upwards trend. If we're trading below VWAP, we are still on the short side. Yeah, it's a good benchmark if we are in a sideways up or downward movement. Also here, you know, also like I said yesterday, I'm not inventing the wheel new. There is a good book about it from Brian Shannon. He published it this year, I think. I mean, the VWAP is already old story, and he wrote a book about this, the anchored VWAP. I also can give you here the Amazon link if you're interested in this to get deep dive into this topic. He's dealing a little bit different with the VWAPs than I do, but if you want to have basic information about this, it's a very good and must-read book, I would say. Yeah. And now we're going to simply look into Bookmap, for example, and TradingView to actually find examples. Yeah, as always, I always like to do things in real, and I'm trying to get here the best information. So in TradingView, for example, you have the trading panel here on the left side. There's something like projection, and there is something called like anchored volume, no, not anchored VWAP, sorry, anchored VWAP. You simply click here, you make a star, then we have it here in our favorite toolbox, and it becomes one of my favorite spots. Let's have a look. This is the ES right now. Maybe let's look at a simple example. NVIDIA. NASDAQ here, and we have a look at the daily chart. So if I want to analyze a stock like this, yeah, yesterday I already explained that we should look at rotations because there are accumulations, and then basically after accumulation, it's going into a range, into a trend. We can see here, this is a nice range, and then we have the breakout to the upside. Yeah, I'm using basically sorts of this. So we identify this level. So when should I buy this stock? Should I buy the breakout here? I don't know. I don't know when the breakout is. I could also buy here, here, maybe here, and I would have many failed breakouts. Yeah, it's a way to trade, definitely. If you catch the breakout and you hold your positions, it's very nice, but it's not my personal style. So if I see a stock like this right now, how can I find reasonable entry points? Yeah. For me, I'm simply going back into the history, and I am using the anchored VWAP and try to draw it simply on high points, low points. And here, like we said, gap up, also interesting. And also here it's the breakout point. So now I get different zones here, and probably you can already see something. Yeah, when is a reasonable price to actually enter the market? Yeah, if I trade the breakout, well, I can find entry points in a lower time frame. But let's assume I'm simply a conservative trader and I want to make long-term trading decisions to build up my portfolio. Then I would simply wait and probably cry that NVIDIA is running up, but to buy here, it's very nice, but you always have to calculate your risk. If you enter a market, when do you want to get out? When is your stop loss limit reached? Yeah, and how much do you want to risk? These are the key essential questions that you have to ask yourself. So what is the right reward to risk ratio? To enter here, for me personally, not. I would wait that the market is going to touch the VWAP, and we can see that here. This is an entry point where I know that the big players are also entering the market, because this is a fair price value. And after this, we can see that the market made another big jump. So, and if I know this point, I'm simply going to add another VWAP here, yeah, because I also know the big players cannot actually buy with 100% of their buying volume. Maybe they bought like 20% here, another 20% here, and they still have to build up their position, yeah. So they're going to enter a new VWAP. And if we look a little bit closer into that, we can see that the market moved into this direction, came back to the VWAP, and again, you have a nice entry point here, a second entry point. And you still have the confirmation that the market is an uptrend. Then again, you have a fair entry price with a fair reward to risk ratio that we can accept and to build up our position sizes. And again, the algos are going to start to buy here. Yeah. And now,
Robert, can I ask a question?
Yeah.
So if the large firms and the traders are rewarded for, buying above and below appropriately the VWAP, when you have an uptrend like this, it seems like that's above the standard deviation. Isn't that considered too expensive? Or how do you know when touching the second standard deviation is considered a low price versus a high price?
Basically, of course, each firm has its own rules. Yeah. What is for them expensive and what is for them cheap, so to say. I can only tell from my side that if my traders would buy a stock in this zone here, for example, yeah, they would definitely buy too high. We're too far away from the breakout VWAP, so to say. If they buy around this area or even around this area, I would consider this for me as a fair price value. And then if they bought at this area and they were waiting, and then we could see how many stocks they could actually execute, yeah, from our position size that we want to enter, then accordingly they're getting paid. But if they enter here in this zone above, or if they're buying here in this zone, it's simply for us too expensive. Well, maybe other firms have also different reasons, like a ETF also. If people invest in that ETF, they have to actually buy the stock, yeah, to cover this. There are also different rules or different strategies in this. But for me personally, and from what I know from other firms, also Brian Shannon is writing this in his book. If you buy your stocks around VWAP, you basically have a fair price and you're getting paid accordingly. Yeah. If you get, of course, prices even below VWAP, and we can also see the market went on the daily chart, is this now below VWAP here, actually, this couple of ticks, well, then you're definitely the genius buyer. Yeah. But you will not have a huge liquidity at that. Maybe you get a couple thousand shares below that VWAP price. Yeah. But then this is, if you are aware as a trader on this situation where you can make good money. And then we can see immediately the buying pressure is coming. Does this answer your question, or?
Yes, I think it does. I think that kind of with the deviations, like you have the center line of the VWAP, and then you have the second and third deviation. And so I guess step one is kind of also determining whether it's an up day or inside range day or a down day, so that you're using the deviations properly.
Yeah, exactly. I did not include the deviations right now. I wanted to do that at a later point. For me right now, it's simply to understand the basics, yeah, of how to understand VWAP, that we can know, okay, if the market comes to this area, that we can actually jump in. I actually, for long-term investments, I'm not using deviations. I'm simply using the base VWAP. And for me, if I want to invest in NVIDIA, actually, I really want to do it, but right now I'm not willing to pay these prices. I would wait that the market comes back to like 103 and $86. And we will see these prices, definitely. Yeah, the next crash will come, that's for sure. But I'm not sure if this is this year or next year. But then I'm ready and I have the cash on hand to actually enter the market.
Excellent. Thank you. Good answer. Appreciate it.
Yeah. And again, like this is now a daily chart for stocks. You can use this for futures. You can use this for gold. You can use this for currencies. You can use this for cryptos, for energy like crude oil. Yeah. And if I'm looking at a daily chart, weekly chart, or 15-minute chart, that doesn't matter. It's all the same. It depends on your own investment horizon, how long you want to be in the market. Questions: do we enter right at the touch, and what are the expectations, Robert, in terms of SL and TP? Ramin, that is also, many people have different opinions about that. For myself, for long-term investment like this, I simply enter at the touch. I would place my order like $1 above the VWAP, because I do not care about the dollar or $1 price movement. I want to see that NVIDIA probably goes from 103 to $1,000 over a long time period. On the short term, I always suggest to look at the volatility index, the VIX, as an indication of where to place your stop loss. Yeah, every market is different. For every market, you need your own definition of stop loss and take profit. If you really have no idea, first of all, you have to understand what is your time frame. Are you a scalper? Are you a swing trader? Do you hold your positions couple hours or couple days? This is the first thing. If you want to get an indication, simply look for the average true range, ATR. We can see this ATR here, and we can actually see what is the average price movement during the day. Right now, we have a price movement of like $5. So if you trade on a daily chart, your stop loss should be at least $5, yeah, because it is a daily range. And also, on the other side, you can basically expect a take profit of $5 or more. And if you go on a 5-minute chart, you can find that we have, during different trading zones, yeah, we have a fluctuation of like $1.3, and for market close, basically $0.50, yeah. And according to this, you can place your take profit and your stop loss. And for each individual market, you have to define it by yourself. For me personally, if I trade on stocks, yeah, I really want to make long-term decisions. I'm not trading stocks, I'm investing in stocks, but I want to find a reasonable investment price. And this is when I look at when the market comes back to the VWAP, yeah. And then I'm not also entering maybe not one time the market, I'm also entering 2 or 3 times, yeah. If, for example, we can see here at NVIDIA on a daily chart, I would have multiple entry points. Like 1/3 I would buy at 102, 2/3 at 86, and then probably at 65 I would have another trailing buy-in. Because I believe on the fundamentals of that company, yeah, of course, artificial intelligence, blah, 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 whatever. I do not believe that NVIDIA is going to be bankrupt. It has long-term, very successful business case. So I'm just looking to enter this stock as on a fair price level. If I go into, let's say, short-term trading, let's look here at the ES from today. We can go on the 5-minute chart. Actually, that was yesterday. Our drawings from yesterday. I'm going to delete this. Oh, yeah. So now the drawings are gone. We have the exchange trading hours, the trading hours, which are basically 24 hours or 23 hours every day. So if I look at this chart and I want to get an idea where to trade the VWAP, this is now the 15-minute chart. First of all, basic ideas, drawing support and resistance zones here, yeah. And we can see that we are basically moving in a range. Buy below, sell here. But even in this range, we have small trends. Yeah, that's the big picture. So if I look at the day today, we saw this sell-off at basically in the pre-session. It started. We went to the 550. The market went down. So how can I define if this trend or how far this trend goes? I'm simply taking the VWAP. I'm adding this VWAP here, and I'm trying to find entry points. It's now here. Basically, there would not be any chance to actually enter the market. I would have entered probably a short scenario here at the VWAP. Yeah, I'm not sure if this really worked out. I did not follow it, but this is an indication that we are here in the downtrend. As long as the market is trailing below VWAP, it's short. And then we broke through, yeah, and actually broke through here, broke through here. So now we are on an upside. But where should I enter this as a market on the upside? Only thing for me is also to add a VWAP at the bottom here. Probably go on a smaller time frame, 5-minute chart. We can see that would be okay. If we are really short-term traders on Bookmap, maybe I would have seen that we have the high, the market goes down, is touching the VWAP, and then the sell-off started. Even here, market touched here, when couple ticks above, we have this pullback. Okay, maybe it could work or not. But what we can see here right now, we have this VWAP, and we are entering the VWAP here at the bottom. And we can see also very nice here, VWAP at the bottom. I do not know where the bottom is, I'm just speculating. So I'm always entering the VWAP at the bottom. The market goes up, touches this VWAP, touching the VWAP again, and the buying pressure is coming. And now we have two VWAPs coming together. This is a support zone, this area. This is where I would look for long signals. On the other side, I do not know if the uptrend is still continuing or not. You simply take the next VWAP, entering it here at the high, and we can see that we are trailing around this VWAP price. As long as we do not really get above this VWAP and creating like this black hole, the market is still in a sideways move. Right now, I wouldn't trade anything here because there is nothing to trade. I would wait that the market comes to the 5,530 to find a long entry points. Some more questions here. It's easy to understand, but when it comes to day trading, it's difficult for me to identify important lows and highs. Can you talk about this topic as well, Rezo? Yeah, I think I'm doing it right now. Really, to identify, we do not know if this is really a high or low. Yeah, you just have to think couple steps ahead. Assume that this is a high or low, like I'm doing it here right now. I assume this is a high, so I place the anchored VWAP here. But right now there is no movement at all, so we're actually trading around this VWAP. There is simply no direction at the moment. I would wait that we actually, like I defined this as a low, I defined this as a high, and this VWAP was respected, so I consider these two as support zones. And if we actually go to this level, maybe I would look for a long trading entry point here. And if the market comes back to this zone, first of all, the market has to go back from the VWAP to come back, and then I could look for short signal. We do not have any, I call it the vacuum or black hole. We do not have anything like this here right now. The market is simply trading in a range. So there's nothing to do. Wait. So we're here.
One thing that helped me before, Robert, is when you talked about the black holes. I don't know, maybe others will appreciate that.
Yes, exactly. The black hole. Actually, this is a nice example on the 1-minute chart. We define this low. Actually, we do not know if this is a low, but then we are creating this nice up move, basically to this VWAP, and we are creating this black hole here. Yeah, this is what I mean. And the market simply touched here. This is a perfect trade. And then the show goes on. And I'm looking for these sort of black holes, yeah. Also here right now, in this situation, there is no black hole, nothing, it's just sideways. It's nothing that we can do. We simply wait that the market is going to this area. Or breaking through on the upside, yeah, going above here, creating this black hole, coming back, and then we can look for a long signal. We can look for what's the smallest time frame we can trade? Basically any time frame. Yeah, the smallest time frame you can basically trade is on Bookmap. Yeah? And here we can add the VWAP. You must find markets that have liquidity. That is the most important thing. If you have sufficient liquidity, you can trade it on very small time horizons. For stocks, basically, I suggest like 15-minute or 30-minute chart or even longer. Same for Forex markets, Euro, US dollar, also 15 to 30-minute charts. Crude oil, you can trade much smaller time frame, gold also. really you have to look at basically at the order book. Do we have huge slippage, or is this really like here that there is no slippage at all? Then we can define a very short time frame. Can you please give an example of how to place the SL-based VIX? Well, there is no rule for that, Roxana. For me, the VIX is basically every day I'm looking at the VIX and I can see we are here now at 12.76. That is very low. Very, very low point. And if we look at the historical data, we had VIX above 20 or 30 or 40, then the markets become very volatile. There is no rule how we can do that. For me, it's simply if I know that we are right now at 12 or 13, I can work with very tight stop loss and take profits. If we go probably to 18 or 20, then the market becomes more volatile and I have to use larger stop loss, maybe then 7, 8 ticks or 10 ticks even. But we can see it at the same time also in the order book. The order book will become thin. So now, for example, we can see here, there's an example of the ES. The market is making this up move, yeah? So we can assume that we have now a change of trend. So I'm simply entering an anchored VWAP here. It's loading right now. And if the market basically comes back to this area, this would be a valid support zone. So that we believe the market will continue to move up. The same thing I think we should see now in trading view. Yeah, we are starting. This is what I draw here. The market should go up. Basically, I also want that the market is taking out the high because otherwise we are still in the range. But on the lens, no, but still we are going to create this black hole here, how to say. This black hole is created. And now let's see what the market is doing around the 38.25. Exactly, we can see it here, 39, it's a little bit higher. But this is a valid support zone to assume that the market might go up, or the market is still going back into that range. The only thing that I did not like is that the market did not take out the high. So the market is basically still in that range. The range from here. There. To there. So this is still a range, and yeah, market touched the upper liquidity zone and now is coming back to the lower zone. So there is no valid trade. The VWAP is, well, if we are trading in a range, we can use the standard deviations as the upper and lower bands, yeah, as indication. But really to find the long-term trend, we must have a trend, so to say, yeah? And that means not trading in a range. Also, range must be so big that we can actually use these moves. But here, as long as we stay into this area, is not much to do. Maybe let's have a look at other markets. A little bit more active. What about crude oil? It's very also crude oil. The first view is we are still also here. You already can see it on the 15-minute chart. Market is in a range from here to there. As long as we stay in that range, well, it's basically no use of trading the VWAP. You can use it in a very short time frame, maybe 1 minute chart. But then you have to keep in mind, we touched the bottom here, we enter the anchored VWAP here, it's a low. And basically we would wait that the market is coming back to this area to find a long entry point. Switch to another market, gold. Same thing, 15-minute chart. Also here, right now, everything seems to be in a very rangy situation. Also here we could assume that the market is going back to this bottom of the range, and well, then if we are here and the market is making a pullback, I would simply look for an entry point here at a pullback, entering the VWAP and waiting that we get a pullback to jump on the market. Why is every market so in a range? Let's look at Euro US dollar. What's going on here? Well, same situation. It's very boring.
Robert, you just showed gold. Can you go back to gold, please?
Yeah.
Because now when you say the market is going to a downtrend and then you put the anchored VWAP and you would go long there, or would you go short there? Because for me, it's definitely a downtrend and I would only look for downward size.
Well, basically for me, if I look at this picture here, we are in a range. Yeah. Market
Okay.
goes from here to there, from here to there, and then I would assume market will probably go back.
Okay, I understand.
So this is
Thank you.
the assumptions, the main picture. So I would look for a long entry here.
Okay, good.
And stop loss, of course, just below. So I have a tight stop loss. And well, if the market breaks through, okay, then I lost a little bit. But that is a fair price level for me.
But when you say you would wait until the market is going back to the supply level, or would you take only some ticks?
That depends on my trading style. You know, if I'm trading, for example, the S&P future, I'm using very tight take profits. Yeah, also like only 10 ticks or 8 ticks, and I'm happy. But if I trade, for example, other products like gold on a 15-minute chart, I would really wait that the market probably goes into this higher zone here.
Okay, so this is more like a swing trade.
Exactly, yeah.
Okay, thank you.
And right now in the S, we have a range, but when the market moves upwards and creates black hole, do you set a new VWAP? Yes, definitely. Then I would set a new VWAP. Right now, this one we can actually dismiss. This one is not important anymore. This VWAP here. Now I would simply wait that the market either, well, there are two options to trade. I actually go short here at the high of the range, or I buy here. And if the market really breaks through, then I would enter a new anchored VWAP at the low. But right now, at this moment, there's nothing to trade. Either short here, 41, long at 35, around this area. And stop below, stop above. Actually, shorts at the 41 area is very nice because we have the liquidity zones here. This is interesting. We could see the market simply went to that liquidity and we had the pullback. Nice trade. And now the market is accumulating. The big players, so to say, they are actually building up their position size. And then they're going to push the market in one direction. In which direction, if the market should go above or below, I don't know. And I also don't care. Well, it doesn't help me. Well, what is a volume volatility indicator you use to ensure the liquidity conditions on the entry trade? Volume volatility indicator. I do not use any volume or volatility indicator, monsieur. Or which one do you mean? Or do you mean the heat map here? So, and again, back to the topic. I know when the VWAP is basically being touched or triggered there, we know that algorithms are going to start to buy or sell. And this is basically the niche, the pullback that I try to use for my trading. Defining high and lows, looking to find a black hole, so to say, and then entering the market. The idea is simply to see when algos are going to buy and sell. This was a very nice downtrend here, started very early, very unusual for pre-market session to have this big move, almost 30 points. But here, simply assuming high, black hole, short, black hole, short, and market is riding. If I cannot catch an entry points here, I can actually add more VWAPs, trying to find any more suitable entry points, but here, nothing. The market simply went downhill. And now we are going here to the, now we want to see that we actually make a low here in the ES. Let's assume. So now I could actually create an anchored VWAP here. Let's see if we break through. Now we have the anchored VWAP here, and interestingly, at the same level of the anchored VWAP, we also have liquidity popping up. Very slow right now. But even here on the very small time frame, we can see high, black hole, market touches VWAP, black hole touches VWAP, and market is continuing on the downside. Robert, how do you utilize the Bookmap info into all this? Do you use sweeps, stop runs, icebergs, or what of the upside high liquidity to be tested first when it's so close? Well, for me, I really like to use the iceberg indicator that we can actually see here. That is a very valuable information for me, but I always put this into context of the whole market situation. That would, but for this webinar, it would simply be too much in information. For me, in Bookmap, most importantly is the bubbles, that I can enter my VWAP, my standard deviations, and that I can see the liquidity levels. That is mostly sufficient to understand Bookmap. And especially when the market is opening, you compare your chart, your price levels, and then you compare them with Bookmap. Do we have liquidity actually at these zones, yes or not? And if certain price zones, like support and resistance zones, also have sufficient liquidity, then this is a confirmation for me to actually enter a trade. And also on the chart, I cannot see where is exactly the support and resistance zones. It identifies this if I look at the liquidity level, then I can really get down to the point and I see how strong is this resistance zone. Are there huge contract sizes, or is there simply small order or even nothing? Yeah. And then these confluences coming together and I can make higher probability trading decisions. Why would you enter here short and not long? Wasn't the price at the range support? Yes, basically you're right. But the assumption is I would actually enter a long trade here above. Yeah. But the assumption is if the market is breaking through this barrier, through the support zone, that we probably enter a downtrend back to this level of 30, so 28, 29 here. Since I do not want to go short here because I do not know if this is a fake breakout or not, I'm entering the VWAP, and we can see that the market actually is hanging around the VWAP here, is not coming above the VWAP price, and then the next selling pressure basically is going to start. And if we take out the low right now, then we are continuing the downtrend. If we look at the longer time frame, basically here, the next target would be like 31. So if you take out the low, that's the way how I can get a fair entry price. If I go short here, well, I have to consider these pullbacks. This is a lot of money. It's a lot of risk that I have to take. In this case, I simply wait for the pullback to the VWAP, and then I have a much lower risk potential and can assume, I speculate that the algorithms are going to continue selling, building up their position size, and actually making new lows, so that the market can go to the bottom side. Now we just made a new low, so if I would simply go short here or trade a breakout, I would now struggling around break even. I would have a larger loss. I have to admit it because it's part of the game. But if I go short at the VWAP as a reference point, I simply could even already realize my first take profit here. Yeah. It's like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, probably I would be already out of the market. Nice example. So I understand you identify ranges and you wait until the market breaks high or low. After that, you set an AVWAP on high or low before momentum, and you want for first touch. That's what you repeat. Seems to be, yeah, Rizo, yes, exactly, yeah. You brought it to the point, yeah. And this is a very low risk and high reward trading approach. And yes, that is quite easy. I can put a lot of more confluences like iceberg orders, liquidity, and so on into this trading decisions. But like I said yesterday also, the most important thing is if you can identify ranges, then you already have the ability to be profitable over long term. Everything else is simply a fine-tuning, luxury tools, so to say. And if you, of course, if you trade on a shorter time frame, then you actually need better equipment, better data, better equipment, and so on. And I really, that's also, I said it also the first day. On the second day, for me, I want to break down my trading strategy, my trading ideas in the most simple way. But you have to see what is the work behind this to actually get these trading ideas. How many research papers did I read? How many books did I read? How many hours I spent in front of the screen? How many traders and what sort of trading volume I actually executed to get these ideas. And they're continuously adapting, maybe not changing, as long as the algos don't change their structure of trading, which I do not believe right now, this can work. But you have to, and that is actually the art, to identify every single trading day these opportunities. Actually, you can enter again on this VWAP here, where you can add up your position size. There are so many ways how you can trade this. If you're a long-term trader or intraday swing trader, you can enter first position size short here. Second position size you can add at the VWAP. And as long as the market stays below VWAP, we are in a downtrend. But that is not my game of trading. If I trade on a long term, then I'm doing this sort of strategy. For day trading, I have my clear take profit. And then this is also a topic for tomorrow. For the last day, how to actually monetize this and to reverse engineer your thinking. And well, now we also have to quit. There's not much time anymore because I have to be on my Bookmap channel, live stream channel, in 10 minutes for the German speaking customers, clients on Bookmap channel. And then I would say we see each other tomorrow. The first meeting is at 3 p.m. On official English Bookmap channel, and then again at 6 o'clock. So then I thank you and well, see you tomorrow or see you later. Bye.
Bye.